A week after Bitcoin futures began trading on the Chicago-based CBOE exchange, its much bigger rival in the same US city, the CME Group, has launched its own contract for the virtual currency. The introduction of futures allows larger investors, such as fund managers, to trade in Bitcoin and make it a more established asset. But the warnings that it's a bubble about to burst appear to be getting louder. This is how Bitcoin futures expiring next month began trading on the CME. They opened above $20,000 per Bitcoin, but fell as low as $18,300 before hovering around the $19,500 level. A futures contract is an agreement to buy or sell something at a predetermined price at a specified time in the future. They're used by investors to both hedge against price volatility in a wide range of assets, including currencies and stocks, and to take bets on where prices will go next. Meanwhile, the price per actual Bitcoin also fell. It dropped nearly 2% to $18,650. That was after hitting a new record high of nearly $20,000. But the chairman of Swiss bank UBS has become the latest respected business leader to warn about the possible dangers of investing in Bitcoin. In an interview with the Swiss newspaper, Axel Weber said, "We as a bank have consciously warned against this product because we do not assess it to be valuable or sustainable." And I'm joined now by Jeffrey Tucker from Atlanta in Georgia. He's the Director of Content at the Foundation for Economic Education. And Jeffrey, you probably have an issue with what Axel Weber said over there, don't you? I know you do. Look, despite the launch of the futures, people like Weber still don't seem convinced. What's it going to take to convince the Axel Webers and Jamie Dimons of this world?
I don't think they need to be convinced. They will never be convinced. They're protecting their own territory. I mean, what we've seen over the last several months might be the death knell, the sound of the death knell for central banking and the old banking establishment in the United States and around the world. This is a revolution taking place. It's not a bubble. It's not a Ponzi scheme. It's a brand new technology, and it might displace everything we know about finance and banking.
You know we're going to get you back on the show when it goes to $5, don't you? We've seen both the futures and the spot price come off the high since the launch of the CME contract. Are you surprised by that?
No, not really. Actually, I'm reverse surprised. I mean, everything that's happened over the last 30 days has been nothing short of nuts, right? Just nearly insane. And it's shocked me. It shocked even the most bullish friends. We were taking bets at the beginning of, I think it was at the beginning of December, like when was it going to hit 10,000? So that the futures contracts would open up somewhere between 18 and 20 is nothing short of a marvel. In fact, it's the reverse. It's a confirmation that this isn't a bubble at all, that this is a revolution. This is a change times. It's almost like you can hear the hinge of history turning. Maybe you can tell. I'm actually getting really, really excited. You know, I've been hearing about this bubble stuff since it was $14, since it was since it was $30. So I'm an old hand at this. I never imagined that so quickly it would reach $20,000. The capitalization of the crypto asset markets themselves are approaching $1 trillion.
Yeah.
Money talks, as
they say. Final question, Jeffrey. So it's not too late to get in if you're not already in it.
No. Just one quick point about this. Some people think Bitcoin is too expensive for me. Like, don't say that sentence. That is a fallacy. You can get in at $20. You can get it at $30. There's also other coins. Bitcoin Cash is doing extremely well. It was up nearly 30% over the last 24 hours. And I think that's a really exciting currency because it's something you can trade without the high fees. So there's so many ways for people to get in. It's technologically difficult to get in, but there's nobody for whom it's out of reach financially. And that actually is one of the reasons the sector is doing so well. It's a democratic way for people to own valuable financial assets.
All right, we will see. Jeffrey Tucker in Atlanta, Georgia. Thank you so much.